So the following trial balance relates to Bawabu Limited as at 31st March 2021. So ordinary share capital, share premium, retained earnings, property at cost. So property, land was 146, but the total they are talking of 732. So when you have 732 and land, they are saying 732 and land is 146, then difference always is for buildings. Then we have plant and equipment, accumulated depreciation, plant and equipment inventory, trade receivable, bank overdraft, deferred tax, trade payables, current tax, revenue, cost of sales, distribution, admin, dividends, bank interest. Additional information. On 1st of April 2020, the directors of Bawabu resolved that the financial statement will show an improved position if the property was revalued to market value. At that date, an independent valuer valued the land at 160 million and buildings at 485. The remaining life of the building as at that date was 25 years. Bawabu Limited does not make a transfer to retained earnings for excess depreciation. Ignore deferred tax on revaluation. So I want us to carry out that revaluation to know whether we are reporting revaluation gain or revaluation loss. That is what I want us to check. That is what I want us to check. So this one you can just say revaluation. So revaluation, they are saying they revalued land at 160 and building at 485. So you will come and say revalued amount is 160. You're working in thousands plus 485. What is 160 plus 485? Someone? $160 plus 485. What do you get? $645. Good. 645. Net book value, I want to know whether we gained or we lost on revaluation. So net book value of land and buildings, check trial balance, it was 732 minus accumulated depreciation. So accumulated depreciation on buildings, I hope you can see buildings, was 122. So if you can see that figure, those figures, then tell me how much was the net book value. You know, for you to know whether you gained or you lost, you check the revalued amount against the net book value. So net book value is the cost minus depreciation. But you know, building is the one which is being depreciated, not land. So you just take this minus this. That one comes to how much? That one comes to how much? Somebody? 610. So the book value is 610. But the revalued amount they have said is 645. So revaluation gain. Revaluation gain, we are talking of a gain of 35. We are talking of a gain of 35. Yes. So in case we need it, we shall apply it accordingly. So that is okay. Let's continue reading. So that was in regards to note 1. Note number 2. Sawa. Let's proceed. Note 2. Plant and equipment is to be depreciated at the rate of 15% using the reducing balance method. All depreciations is to be charged to cost of sales, but none has yet to be charged on any non-current asset. So depreciation. So depreciation. Let me start with buildings. So buildings, I will backdate it to note 1. Note 1. So you check note 1, they are saying the remaining life of the building was 25 years. So, but the building had been revalued to 485 in that note. So you will take 485 divided by 25 years. So how much is the depreciation? How much is the depreciation? This is another approach unaweza tumia. Instead ya kusoma yote then you come back, unasoma ukifanya analysis. Then still another way. Whichever. So what is 485? I hope you are seeing note 1. It was revalued to 485. Then on that date, it was having useful 19,400. So this is 19,400. To cost of sales. That is what the examiner said. All depreciations will go to cost of sales. Then plant and equipment. Plants and equipment. They have said we use reducing. So reducing, you can see 427 minus 85,400. Reducing means you first of all subtract the accumulated depreciation. Then they have said you charge 15%. So how much? How much is that? How much, somebody? The difference, then you multiply 15. $51,240. Also, cost of sales. They said all depreciation should go there. Let's go to note number 3. Baobab Limited estimated that income tax provision of 130.8 is required for the year. So that is the current tax. The balance on the current tax, the trial balance represents the under/over provision of the tax liability for the year. Fine. As at this, the tax base of Baobab Limited net assets was 292, less than the carrying amount. The income tax of Baobab Limited is 30%. So, fine. So that one tutadili nayo pale kwa tax. There's no need for me to do that working now. We'll do it when doing tax. Baobab Limited made a 1-for-5 bonus issue, which has not yet been recorded in the books. The company intends to utilize the share premium. Here we have a statement of changes in equity. Required statement of profit or loss, statement of financial position. We have not seen admin being affected. We have not seen distribution being affected. We have not seen finance cost being affected. Only income tax and cost of sales. So we can have them here. So 3 working 1. These ones were just analysis. So working 1, cost of sales. So cost of sales reported. So they reported check trial balance. Trial balance, if you check keenly, you will see 2,006,900. Then depreciations. Depreciation. Buildings 19,400. Plant and equipment 51,240. So get the total. So can you tell me the total for that? Thank you, Rose. Rose says it comes to 200,775. Hiyo kweli Rose? Ni 220. Hebu check well. Hiyo yako ni mingi sana. The zeros you have are many. It should be 2775. 775, 40. Hivyo. So that is good. Then deferred tax. Deferred tax. So have deferred tax account. Deferred tax account. Balance brought down. Balance brought down. Check trial balance. Check in the trial balance for the balance brought down. So for the balance brought down, in the trial balance, we can be able to see 97,600 if you check your trial balance. Then balance carried down. Balance carried down. So balance carried down. Check note number 3. Check note 3. So check note number 3. They are saying that as at this, the tax base of Bawabu Limited net assets was 292, less than the carrying amount. So you'll come here and say carry down 30% of 292. 30% of 292. What do you get? So that one comes to 87,600. So the deferred tax has decreased. It has decreased from 97 to 87. Decrease in liability is an income. So that is tax credit. So P&L, it has decreased with 10. That is the balance in figure. 10. So this one should reduce what we are going to charge. Then also, there is something. In that note number 3, they are saying, let's go back to note 3. They are saying that Bawabu Limited estimated that income tax provision of 113.8 is required for the year. So that is the current tax. So write down there, current tax is 113,800. Then the balance on the current tax in the trial balance represents understroke over provision. So can we check the tax in the trial balance? I've seen it. Just tell me which value are you seeing? How much are you seeing as current tax in the trial balance? Yes, 12,800. Thank you. So that 12,800, it is appearing on the credit. Credit, that is over provision. It means they paid more. Credit tax means they are paid more taxes. So they have a tax credit. It's appearing on the credit. So it should reduce any tax which you are supposed to pay. So you less over provision. Over provision. You know, the examiner was not specific. They just say represent under or over. So how do you know it is under or over? It is over if it appears on the credit. It means they are charged more. So this is 12,800. Therefore, the current tax which we are going to take to P&L should be how much? That minus that should come to we are talking of 101,000. 101,000. Full stop. So allow me now to take kwani swali imekuwa ndogo aje? But that is how it is. Let's go to P&L. Let's go to P&L. Let us go to P&L. Ama ni sisi tumeshajua sasa ama ni swali imekuwa rahisi? So let's go to P&L. So right there. So be ready for that. So being ready means we talk of revenue. Revenue, there was no working. So pick it the way it is. This is 27,79,160. Cost of sales. Check your working one. Ulipata ngapi? It was ile ilikuwa 20. Yeah, I can still see it somewhere. 27,75,40. 27,75,40. Therefore, gross profit So gross profit, people are saying 701, 620. 701, 620. There was no other income. So distribution is 164, 700. I hope you can see it. Administrative is 201, 300. So what we get is operating profits. Operating profits. So how much is our operating profits? Operating profits. Operating profits will be how much? $335,620. Finance cost. Finance cost is the interest. Interest paid. Check the last item in the trial balance. The last item in the trial balance. 10,980. So profit before tax. Profit before tax. That one minus that. What do you get? What do you get? $324,640. Then income tax. Income tax, we have to be careful. Current tax, we have already adjusted. What did we get? Please bring for me back that figure. Was it the one coming to 101? Or 101? Check for me that figure for current tax. After we adjusted the over provision. Yes, the 101. So this one is the one which was coming to 101. Then deferred tax, it was a decrease. There was decrease in tax. So decrease in deferred tax is a tax income. Check deferred tax account, it was 10. So it means we are reporting 91. So profit after tax, PAT. Profit after tax will be how much? Profit after tax, 233,640. It ends there. I'm not bringing other comprehensive. You don't have a list, you are other comprehensive, the revaluation. But check the required. Required, the examiner said statement of profit or loss. Profit account ends at PAT. I will have brought revaluation down here if they say profit or loss and other comprehensive income. So you can bring it, but for fun, it will not add you anything or subtract anything. But P&L stops at that stage. Next required, they want us to prepare the statement of financial position. So this time around, we are not required to prepare the statement of changes in equity. So where it is not required, you just do it that way without preparing that. So before we prepare balance sheet, allow me to check PPE as a working. Let's check PPE, land, buildings, then plant and equipments. Like that. Once an asset has been revalued, you go for the revalued amount. You go for revalued amount. So land was revalued. Check note 1. Check note 1 there. Land was revalued to how much? 160. Land was revalued to 160. Buildings was revalued to 485, but after that you charge depreciation. It was 485 minus, I remember you charged 19,400 depreciation on buildings after evaluation. Please check to confirm. If you are in agreement, give me the difference. All right, so Ngoja kidogo, Ibra is asking, buildings, what is wrong with buildings? You know, buildings, there was a revalued amount and the book value. The rule is, once you have revalued asset, you consider the revalued amount. Kama kuna depreciation, hiyo ndio utatoa kisonga mbele. You don't go back to the initial value of the assets. So how much is the difference? 465, 600. Plant and equipment. Yes, sir. Mbona umeshakubea hiyo pesa? Mbona umekubea pesa? Si umeshagawa pesa? Chukua 5,000 ya Ruto. 5,000 from Ruto. Pea panya kutumia kwa pesa. Mwambie Ruto umechukua advance. Nasema kuna hiyo kuletea Ruto. Sorry, we were talking something. So that is that. Plant and equipment. Plant and equipment was how much? Plant and equipment was not revalued. Plant and equipment was not revalued. So you will take cost minus accumulated depreciation minus depreciation which we have charged for this year. So the cost of plant and equipment 427. Oh, I think I know what Ibrahim is trying to bring up. But you know, I separated the land and buildings, the two of them, if that's what you are saying. I separated the two of them. So land and equipment was 427 minus accumulated depreciation, which was accumulated depreciation is how much? 85,400. Minus how much did we charge depreciation for this year on plant and equipment? How much was it? Check for me the depreciation for plant and equipment. How much did we charge? You have the figures? So that was, is this the one which was 51 to 40? 51 to 40. Then subtract everything and give me the figure now. Subtract and give me the figure. Subtract to 90, 360. Therefore, total PPE will be how much? Check for me the total PPE. Total PPE will be 915, 960. So right there, Bawabu Limited statement of financial position as at 31st March 2021. So you can have those two columns. So non-current asset, PPE, property, plant and equipment, property, plant and equipment. This one here, 915, 960, 915, 960. Then there is nothing else for current, non-current. So we go to current assets, inventory. Inventory today haina maneno andaka or overcast. Leo maisha ni. So inventory, if you check, you'll see 469 700. Wait, is that the Anna? It is 324. 324, 500. Receivables. Receivables is 469. 700. Then I don't think if there is any other. One is or 2 million your current assets. There are only those two. So add this, bring it here. Tell me total assets. Total assets. So what is the sum of these two? This plus this comes to how much? All right, so total assets. Let me just go for the total assets. So okay, fine. This one was 790, 794, 794, 200. For total, I've been told to be 1710, 1710, 160. 1710, 160. That is it. We go to equity and liabilities. We go to equity and liabilities. Ordinary share capital. Excuse. Ordinary share capital is the first item on top, 560. Share premium. Share premium 160. Retained earnings. Wacha tungojane hapo. So we kick off with retained earnings. The one they have reported 241,560 plus our profit after tax for the year. How much did we get? We take a statement of changes in equity, we take it there, but if that was not required, then we show it here. How much was it? How much was our profit after tax in our P&L? The final profit we got there. Somebody? $233,640. $233,640 minus dividends. There was dividends. Check the second last in the trial balance. 24,400. 24,400. So can you adjust for me retained earnings? Nipatie figure. So that one I'm told 540, 800, Rachel. Why are people not confirming that same figure? Because they differ with you. Karen 450, 800, kila mtu 450. So Rachel, amen. 450, 800. There was revaluation. There was revaluation reserve. Revaluation reserve. Initially, there was no revaluation in the books. So the one which we got during the year, how much was it? It was the first workings to Lianza Nayo. How much was the revaluation gain? How much was it? 35,000. So can you add for me the total of equity? Add for me the total of equity. Consolata, please check note 4. Wait. Note 4, please, before you add. Note 4 imeleta shida. Note 4, sasa hiyo imenyaribia kila kitu. Note 4 is destroying almost everything. So in note number 4, but not serious one, but it's going to have some alterations, but the net effect will be 0. Bawabu made a 145 bonus issue, which has not yet been recorded in the books of accounts. The company intends to utilize the share premium. So they are giving bonus. So bonus, you can do that working somewhere outside. So bonus is equals to a fifth of check ordinary share capital of 560. How much? What is a fifth of 560 on ordinary share capital? It comes to how much? A fifth of this 560. That one will be how much? That is 112. So 112, you will subtract. You add it as part of shares, but they are utilizing share premium. So reduce share premium, then increase the ordinary share capital. So that one will be 560 plus 112. Then here, this one will be 160 minus 112 because they are utilizing that account. So you increase shares, you reduce share premium. The net effect, mwisho itakuwa 0, lakini those are now the correct figures. So can you give me those answers? Give me those two. What do you get? We get ordinary 672. Share premium ratio 48. So add the totals. Thank you for that, Controller. So add the totals. So total I'm told is 125,800. 125,800. Non-current liabilities. Non-current liabilities. We have only deferred tax. So deferred tax. Deferred tax. Deferred tax. Deferred tax, check for me the balance carried down in the deferred tax account. In the deferred tax account. In the deferred tax account, 87,600. Current liabilities, current tax. Current tax. ABC along the current tax, now trade payables. What are the payables? Jazoya? Though there is no problem, you can start with any. What are the other payables? Payables was 259. 259, 860. Then bank overdraft. Bank overdraft 43,100. Current tax. Current tax. Current tax was mentioned in note number 3, 113,800. There was no installments. So how much is the total for current liabilities? Total for the current liabilities. Total for the current liabilities. So 416, 760. When you add total equity and liabilities, how much? Balanced. So balanced means 1710, 160. Ni hii imekuwa rahisi ama ni sisi tumekuwa werevu sana? Or which is which? Nawauliza swali, ni hii imekuwa rahisi ama sisi ndio tumekuwa sawa? Ama umeona imesonga mbio ama ilikuwa fupi? So now with those three tumekuwa werevu. Joseph, tuko sawa, sisi tuko sawa. So now what I published the hapo till we meet again. Let's publish rest there till we meet. So our next topic is IS number 7. Statement of cash flows. Statement of cash flows. So allow me to share with you the notes. Allow me to share with you the notes. On cash flow, ndio muniandikie. So just a minute. So I'll share with you the notes on cash flow. Kindly open. So I want you to write these notes. Next class on Thursday, we just discuss, then we do the questions. Cash flow, we do 2 questions, then we are done. So, Mwiti, who has all the notes from group accounts to published financial statements kindly? I'm sure Consolata uko nazo. So, even Daniel amejitolea. So, kindly, Daniel amesema ako nazo. So, Daniel, kindly help Shalin with the notes. So, Shalin, text in the group. You say, so Shalin has given you the number. Daniel, number umepewa utume notes. So take her number and help her. So thank you. Let's meet on Thursday next week. So Thursday next week, program next week. Thursday, Friday, tutamaliza cash flow. Saturday, I'll book you on Sunday next week. Time is what we'll agree next week. So Saturday, Sunday, tutamaliza ratios. Then the other week, tufanye partnership na branch. Then tutaachana in due course. Otherwise, have a nice weekend. Write those notes. I've given you the remaining minutes to write the notes. So done. So write those notes. Then as you write, also be reading. Then we'll discuss them. Tukifanya swali. Otherwise, do have a nice weekend. Take care and be reading. Asanteni.